In a real estate market often characterized by intense competition and escalating prices in prime locations, a critical question emerges for astute investors. Where does genuine, untapped value still reside? Many aspiring property owners find themselves sidelined, believing the most lucrative opportunities are reserved for those with immense capital or insider access to established high-growth areas. Yet, according to a recent analysis by the National Association of Realtors, nearly 40% of urban and suburban neighborhoods nationwide exhibit significant potential for appreciation, despite being historically overlooked or even stigmatized by conventional investment wisdom. This statistic reveals a profound opportunity, one that skilled investors can leverage to build substantial wealth. What if you could consistently identify and capitalize on these hidden gems, transforming perceived liabilities into thriving assets? Our exploration today centers on Maria Sanchez, an investor who mastered this very art. Her journey into real estate wealth began not in the glittering districts of high net worth investments, but in an overlooked neighborhood, a community many dismissed outright. Maria's approach was a masterclass in challenging conventional market perceptions, proving that profound returns often lie just beyond the comfort zone of mainstream analysis. But here's the catch. Her success wasn't merely a stroke of luck. It was the direct result of meticulous data-driven strategy and an unwavering commitment to long-term community engagement. Maria Sanchez initiated her investment journey with an unconventional yet highly effective market analysis. Instead of focusing on areas already saturated with investor interest, she delved into demographic shifts, public infrastructure projects, and emerging local businesses in an overlooked neighborhood. Her research extended beyond simple property values, examining school district improvements, new public transit routes, and local government initiatives aimed at revitalization. This deep dive allowed her to identify what we term undervalued assets, properties whose current market price does not reflect their inherent or future potential value, often due to prevailing negative perceptions or a lack of informed buyer interest. Her methodology involved cross-referencing crime statistics with community-led initiatives and comparing historical property data with planned zoning changes. For instance, she noted a particular district where a new community center was slated for construction, accompanied by increased police patrols and a significant drop in minor offenses over an 18-month period, a fact largely ignored by broader market sentiment. This granular approach to market analysis, looking past superficial data points to uncover underlying trends, became the bedrock of her strategy for acquiring these undervalued assets. With her target overlooked neighborhood identified, Maria's next step was strategic acquisition. She focused on distressed properties, foreclosures, short sales, and homes requiring significant repairs, which allowed her to purchase well below market rates. Her initial acquisition was a triplex, purchased for 65% of its estimated post-renovation value. This particular property, while structurally sound, had been vacant for years, contributing to its negative perception. The challenge was not just financial. It involved navigating the skepticism of local residents and even some real estate agents who questioned the viability of investing in such an overlooked neighborhood. A critical metric Maria employed during her acquisition phase was the capitalization rate, or cap rate. This metric is defined as the ratio of a property's net operating income, NOI, to its current market value, providing an estimate of the investor's potential return on investment. For her initial triplex, despite the low purchase price, Maria projected a cap rate of 10.5%. After renovation and stabilization, significantly higher than the 6 to 7% typical for comparable properties in more affluent areas. This high cap rate signaled a robust potential for income generation, justifying the inherent risks of investing in a less desirable area. The initial perception within the community was a significant hurdle. Many residents viewed outside investors with suspicion, fearing gentrification without genuine benefit. Maria understood this deeply. Her strategy transcended mere property acquisition. It involved active engagement. She attended neighborhood meetings, spoke with local leaders, and made it clear her investments were long-term and aimed at sustainable improvement, not quick flips. This early groundwork laid the foundation for future community revitalization efforts, building trust where cynicism often prevailed. Maria's renovation strategy was not about luxury, but about thoughtful, durable improvements that enhanced livability and appeal. She focused on modernizing essential systems, electrical, plumbing, HVAC, and making cosmetic upgrades that were both attractive and easy to maintain. Crucially, she sourced materials locally whenever possible and hired tradespeople from within the neighborhood, fostering local employment and injecting capital directly into the community's economy. This commitment to local engagement ensured her projects were perceived as collaborative efforts, not external impositions. One of Maria's most impactful decisions was to actively foster local partnerships. She collaborated with a community nonprofit focused on youth development, offering discounted rent for one unit in her triplex to house a program coordinator. This partnership not only provided a stable tenant, but also demonstrated a tangible commitment to the neighborhood's social fabric. Such initiatives transcended typical landlord-tenant relationships, creating a symbiotic ecosystem where her investment contributed directly to community revitalization. The renovations, coupled with her community engagement, significantly boosted the property's value and rental income. Maria meticulously tracked her return on investment, or ROI, which measures the profitability of an investment relative to its cost. For the triplex, her total investment, including purchase price and renovation costs, was $380,000. Within 18 months, the property was appraised at $550,000 and fully occupied, generating $4,500 in monthly rental income. This represented a substantial ROI, validating her initial market analysis and strategic real estate decisions. Beyond ROI, Maria closely monitored her cash-on-cash return, a metric that calculates the annual pre-tax cash flow an investor receives relative to the total cash invested. With a down payment of $95,000 and an annual cash flow of $24,000 after expenses and mortgage, her cash-on-cash return was an impressive 25.2%. Furthermore, she maintained a strong debt service coverage ratio, or DSCR, which measures a property's ability to cover its debt obligations. Lenders typically look for a DSCR of 1.25 or higher. Maria consistently achieved ratios above 1.5, indicating robust financial health and attractive lending prospects for future acquisitions. Her successful initial ventures allowed Maria to secure more favorable financing terms for subsequent acquisitions. Lenders, seeing her proven track record in the overlooked neighborhood, were more willing to provide capital. She strategically leveraged conventional mortgages, but also explored private lending for rapid acquisitions when market opportunities arose. This dynamic financing approach allowed her to scale her portfolio efficiently, acquiring several more undervalued assets within the same and adjacent communities. As her portfolio grew and properties appreciated, Maria began to strategically utilize a 1031 exchange. This powerful IRS provision, also known as a like-kind exchange, allows real estate investors to defer capital gains taxes when selling an investment property, provided they reinvest the proceeds into a similar property within specific timeframes. This enabled her to continuously recycle her equity, moving from smaller initial properties into larger, more impactful developments without incurring immediate tax liabilities, significantly accelerating her wealth accumulation. The strategic real estate application of the 1031 exchange became a cornerstone of her long-term growth. Maria's success was also partially attributable to her keen awareness of broader market trends. While the neighborhood was overlooked initially, She recognized the early signs of urban infill and population migration patterns that would eventually push demand into these areas. Experts at the Urban Land Institute had for years pointed to the increasing demand for affordable, walkable communities close to urban cores, a trend that precisely aligned with the future trajectory of Maria's chosen investment zone. Her timing, though seemingly counterintuitive, was deeply informed by macroeconomic shifts. Investing in emerging or overlooked markets inherently carries risks, including slower appreciation, higher vacancy rates, or unexpected community resistance. Maria mitigated these by diversifying her properties within the neighborhood, acquiring single-family homes, duplexes, and small commercial spaces. She also maintained robust cash reserves and cultivated strong relationships with her tenants, ensuring lower turnover and consistent income streams. Her proactive approach to risk assessment and management was as crucial as her initial market analysis. Effective property management became paramount as Maria's portfolio expanded. She established clear communication channels with her tenants, addressed maintenance issues promptly, and fostered a sense of mutual respect. Rather than merely collecting rent, she saw herself as a steward of the community. This hands-on, tenant-centric approach not only reduced vacancies, but also contributed directly to the positive transformation and revitalization of the neighborhood, solidifying her reputation as a responsible and beneficial investor. Through years of consistent application of her strategic real estate principles, Maria Sanchez built a substantial portfolio, generating significant passive income. The initial undervalued assets she acquired not only appreciated dramatically, but also provided a steady stream of cash flow, freeing her from reliance on active employment. This journey exemplifies how tangible assets, meticulously acquired and managed, can serve as a powerful engine for long-term wealth creation and financial independence. Beyond her personal financial success, Maria's investments played a pivotal role in the genuine community revitalization of the overlooked neighborhood. Her properties, once eyesores, became attractive, well-maintained homes. Her commitment to local hiring and partnerships contributed to a renewed sense of pride and economic stability. The neighborhood transformed from a stigmatized area into a vibrant, sought-after community, a testament to the power of strategic real estate investment when guided by vision and integrity. Maria's story underscores the immense value of an investor mindset characterized by patience, vision, and a willingness to defy conventional wisdom. She understood that true opportunity often lies where others are unwilling to look or simply lack the foresight to see potential. Her success was not built on speculation, but on diligent market analysis, understanding the underlying fundamentals, and a long-term commitment to both her assets and the community they inhabited. For aspiring investors, Maria Sanchez's journey offers clear, actionable insights. First, cultivate a rigorous market analysis approach that goes beyond surface-level data, seeking out the latent potential in overlooked areas. Second, develop strong community relationships. Your investments are part of a larger ecosystem. Third, understand your financial metrics, cap rate, ROI, cash-on-cash return, and DSCR, not just as numbers, but as indicators of your strategy's health and sustainability. The core lesson from Maria's experience is the profound power of undervalued assets. These properties, often dismissed by the masses, represent a unique entry point into markets with significant upside potential. By applying disciplined analysis and a value-add strategy, investors can systematically unlock this hidden value, creating equity and cash flow where others perceive only risk. This is the essence of strategic real estate investing at its finest. Successfully navigating the legal and financial landscape is another critical takeaway. Understanding mechanisms like the 1031 exchange is not merely about tax deferral, it's about efficient capital deployment and sustained portfolio growth. Similarly, a strong grasp of lending requirements and maintaining a healthy DSCR ensures access to the capital necessary for expansion, transforming individual property acquisitions into a scalable wealth-building enterprise. Maria Sanchez's story is a compelling blueprint for building tangible wealth through real estate. It demystifies the process, demonstrating that financial independence isn't exclusive to those with inherited fortunes or access to elite networks. Instead, it is attainable through diligent research, strategic execution, and a commitment to understanding the true, often hidden value of assets in overlooked neighborhoods. We encourage every investor to look beyond the obvious, to question conventional wisdom, and to apply the principles demonstrated by Maria Sanchez. The opportunities are there, waiting to be uncovered by those willing to conduct the deep market analysis and engage with community in a meaningful way. Your next great real estate opportunity might just be in the overlooked neighborhood no one else is watching.